Again, so we're short at 42.75 here. And we're watching to see if this market can lose this big rig jammed move they just did and at least go back to where they ran from, which is 48.75. But I'm ultimately targeting a move back under this white line here at 47.50 for a drop down to the somewhere near the 40 level. It's possible. If that sell bias gets going again, we could see him plow right back down through the center of the opening range here at this red line. That's what we're looking for first of all, to get him back under 57.5. If we can lose that and they get that sell bias kicking back in here, this is a minor all-time high that was made a couple days ago, I think. And then we just get them trading back under 57, holding under 57. There's a good chance we could see the market start to return to that sell bias, fade this phony rig operation here, and just drive this market back down. The fair value is way down here at 54, so that's the power of rigging. It just, the fair value is at 53, but they've driven the price way up to 64. But anyway, let's see if gradually we can get, we're in a swing trade now, so we're gradually going to watch for these different levels to come in and fulfill our trade goal here. Just very treacherous trading the last few days. It's just the way the markets are acting. It's very strange. I was anticipating it was a sign of topping. Yesterday we got blasted on NAS, down 50 handles at one point. They're just trying to scoop it right back up. So the idea is if we can lose the center of the opening range here at 57 and work our way back towards 47, which is the bottom of the opening range. And how easy is that? That's the big question. How easy is that going to be for us to do that? If indeed the case turns out to be that it's a fairly smooth move under 57, so far it's kind of not. Went right to that level and trying to reprop them back up. But if that ends up being a fairly smooth move, then we'll be able to target some lower action. Okay, the key level is obviously that 57. Then breaking under that, we got a number at 55.75. So let's see if we get a reaction under 57 that takes them down to 55.75. And if that happens, let's see what goes on from there. Do they lose 55 or do they just kind of hubble bubble right in that 55 to 57, 55 to 58 zone? In other words, I'm looking for a stronger bearish bias to kick back in here. So let's see if we can get that going. Otherwise, it's no big deal. We'll just try to configure things accordingly. So again, watching to see what kind of selling fluidity we get today. Obviously they've just created this phony market. You can see it on the 5-minute chart here. Let me show you this. Completely fake. Everything's rolling to the downside. They got a lot of pressure coming in. It's a very short-term 5-minute chart. And then one big candle, and they goose the whole thing back up here in one candle. So that resets it doesn't exactly reset the bullish tone or anything, but it's what they did was they just threw water on the downside slide. So I'm watching for this to fade. That pushed the 13-minute up. Let me check the 30-minute. The 30 is pretty solid. If that yeah, this 30 is still bearish. It has that green candle from that ramp up, but the 30 is still pretty bearish here. So ideally, it will hold the prices back so we can accomplish our goal for that lower move here. There's 57, so watch that 55, 75. Let's see if they take them down there, and if it turns into continued downside pressure type move, that would be great. If not, we'll just wait it out a little longer. I still think though that all the riggers did with this phony ramp up was put off the inevitable of a stronger downside move. I don't know. See, they got the Dow down 3080, same old stuff, just you got the Nas is obviously percentage wise in the toughest shape here. Got the gold jacked back up to 20 area again, so that's good. We're long gold, so it's good. Crude oil's nuts. These markets, you just have to wait, and then it's not like every day. You can't expect every day to be a smooth day. The last 3 days, very erratic trading both on crude oil and the mini Nas. Doesn't mean you can't make money. It's just you have to be super selective, and the crude oil always works, but this is pretty darn choppy. So this is like a real choppy whipsaw second level move here, but I'm just avoiding crude oil at this point. So let's see if we can knock them down under 55 as a possible sign that the market really wants to return to that sell bias.
Order pending.
There we go. That helps. And let's see if we can turn this thing around and get a stronger gain here. Got 62.75 short, and watching for them to break down under 54.5 or lower is a key number. So let's see if we can break them down under 54.5 or lower, hold the pressure on that number, and we could see the sellers come back in. They kind of had a shot across the bow this morning on Globex and everything. Let's see if we can keep 54.5 pressurized here. So far so good. Pretty smooth, and take something off at 10, which is 2. We're short at 62.75, so at 52.75, that's 10 points. Take something off of your multiple contracts at 52.75 right here. Can mark that. Take something off at 10-point gain down there at 52, just 53 for even numbers, just right around 53. And then we're going to hold this actually for an attempted move, possibly, and it's going to get my attention if they go down to 47, because that's the bottom of the opening range, and that would represent what, about close to 15 points. So, if they go sliding down to 47, I may probably will just suggest that um, it's in a bearish tone market. I would suggest we take a second third off at 47. We're off at 10 points now. Mark that on the note here. And then 47. Well, right here at this white line. Right at the white line here, you're going to want to take a second. I mean, we've already got 10 points off in the first third. Take another third off at 47, 48 or lower. See if we can bust 50 out here and just get this thing really punching lower. Such a bunch of nonsense, these riggers. Well, that's why I get so mad, because it's just completely 100%, phony Federal Reserve rigged operation there. No rhyme or reason at all for it. Just complete fraud. And not policed by the CFTC or anything. I believe it's because they do it over on the cash market. And of course, they're the riggers, so they own the whole deal in their minds at least. But, I still think a day of reckoning should be coming pretty soon here. Today kicked off some kind of tone, some kind of mood. But ultimately, if the prices hold under 27.65, well, I was going to say 65, which we already hit, and then 73 is a real key number. Holding under 27.73 overall keeps the tone leaning on the sell down side. And then 65 was a secondary number, and they actually just goosed it up and hit that just now. So 65 or lower, but 73 is the big picture number. And they did that. Let's see what they did here. This is on Globex yesterday. It really hit them heavy on the upside, but still that 73 number, see it right in here, is a key resistance. 73. Here's that 70 area. And then 65. Well, 65 to 73 on a big picture scale is a resistance area that we're watching. You can make a note of that, write it down, whatever. And that's an area we're watching. If prices stay under that in general, the tone should lean towards the sell side. All right, so we're giving a little more time now as they're starting to start the beginnings of a forming of a bearish chart to take it down to 40. Who knows? Maybe they'll catch fire later and get hit harder. Right now, let's see if we can run with this a move. 250 knocking them down under 66.50. And then if we do, then we'll start approaching that 47 half there. If we do. To take off our second, third. Right now, 50 is like a big number. If they can blow 50 out, we're probably on our way to 47.50. And if we lose that, whether slow grind or hopefully fast move, because I don't want to sit here all day like we did yesterday. I don't look to do that. If we can take 50 out, it could start a stronger downside move. So that's what we're watching for right now. Just see if we can take 50 out. What kind of conviction, what kind of punch do they get on the 50? Stuff like that. That's what we'll be watching for. Okay, let's take them out and spill it under 50, and ideally that's going to set the tone for a stronger move. So we got 10 points so far in this weird whipsaw market. It's not my fault. They're just acting very strange. And I still think it's because we're probably coming to maybe an extended topping area. Hopefully it won't be that extended, but it's what it appears to be, is that they're just oh, here comes the riggers again. Just can't give it a rest. Still watching patiently for an extended move down to 47 to see if we can get down there and break 50. We got to break 50, and then if we can get an extended move from under 50 down to 47.50 to see what happens. And that, again, the 47.50 is the 47 quarter, whatever. 47.50 is the bottom of the opening range. If they lose that, that's going to send a message out on a bigger scale picture that the market is probably getting close to some really much stronger pullback. Right when the whole world is just giddy over the stock market. Isn't that a coincidence? Just right when the headlines say global euphoria over the markets, this kind of talk, you know. All right, they're still doing a little propping, but I do have uh, signs here that they should be able to start busting out a lower move here. Taking out 50 at least. That's the next milestone, the 66.50. And then breaking that down, that's when we watch to see if we can start working that way back. Let me check something on a bigger scale here in this market. Is that the low, low, low? No. This is it. Let me put that on there. I have to give it some kind of... Got this blue. Let's go back to some blue lines here. We've got all these ascending uplines with the yellow colors and all that. So I'm trying to mark the I like sky blue. Where'd that go? There it is. What? All right, they just tried to break them under 50, and the goofball riggers came in, and they're trying to prop it back up. So you can see their desperation now. They're following the same numbers I am. They don't want to see 50 break, and they just tried to bust it there a second ago. Took it right down to 50.75, and then they springing it back. So the riggers are on top of it today, once again, like they are most every day. But a lot of games being played by them today. So this is the low. What did I just do? Oh, okay, I see. All I wanted to do was mark today's low, because if they slow grind them or roll it back there, it's going to be probably a little rough on the market. I don't know that that's going to happen today, but we're going to watch for it. Let's see if we can get it going here. They should be willing to dive lower, should be willing to trend down to at least 47.50, and we're going to take our second third off of the entire position. We can get a little cooperation, and all the cooperation we need is just for the riggers to sit on their hands and stop propping up the markets. But getting pretty close to something here, I think. So let's see if we can break it down and knock 50 out. That's going to be the real milestone for right now, is taking 50 out. I'm not sure if they're willing to do it. I would think with the underlying higher time frames, maybe, but I'd love to see them smash through 50. That would be real refreshing. Just really shows some sellers willing to step up and take this thing out instead of allow the riggers to keep manipulating everything. The riggers are going to have to be taught a lesson at some point. And they got a good lesson this morning, but this is why they came back in with all this sour grape stuff here. So let's see if they can roll them back. Crude oil, once it turned around, there was a second level trade here, but it just was so choppy I wouldn't have taken this. And then the whipsaw went nuts. This, okay, here's a crossover here. Now, when you actually get a crossover, that resets the whole pattern. So even though there was that move there, this is a pattern reset with the crossover. So a buy arrow and a pullback the signal line right here resets the pattern for a buy at 42, and up they go. You can see all the green candles and everything. So this was a reset after this crossover. That's the simple rule. If it's all whipsaw and crazy and you get this crossover with matching dynamic trend bands, you just wait for the next buy channel and the pullback. So slowly but surely accumulate these nice winning trades on the crude oil. Oh, here comes the riggers again. Anything but let them slide, you know. It's always a game with these riggers. Always a game. Never can just let it run a natural flow. Like, oh yeah, nobody wants to sell. Everybody's still buying dips, right, riggers? Well, that's what they try to paint that picture. Gold has jumped back up from 1310 area, back up to that, up in the 1320. I don't know. Things seem to be chilling a little bit in North Korea, which is great, of course. They're supposedly going to join the Olympics or something, which would be interesting. Quickly scan the news. I'll do it off our room chart here. Just general checking here. And there's the smash we're looking for. Remember, it takes the second third off at 47.50. They're taking them right down that yellow line's far. Let's see, we get them here. 48, 47.75, 40. I mentioned earlier 48, meaning, don't worry about a tick here or there, but they, we're trying to work them around that opening range there. That's the concern. So they did take them right down to that bottom of the opening range at 48. There it is again. Maybe they'll plow through it here. But so far, so good. Everything's working our way. Let's take that, take them off there. Take a second, third off at 48. And ideally, they're with this selling pressure continuing, they're going to hammer this thing down through 48. But we came in on the low at 47.75, and I did mention 48, so that'd be 48. It'd be 12, 48, 14.75. 14.75 gain on the second half there. And if you're just holding one lot, just try to hold out for the whole thing on a move down to the projected 40 area. I'm looking for a full Fibonacci retrace of this rigged operation here. So that would, the whole give back on this rig deal would start right here at 42. So let's move our limit up to, well, they could be just on the verge of starting a new sell pattern here. Let's stick with 40 for now, but 40 to 42. We can watch 40 to 42. I don't have that marked here, but let me, 40 to, this is the zone here I'm looking to cover. The riggers are shooting back. This is why we took that second amount, why I said 48, just get them out. Don't worry about the exact 7.5, but 48, if you remember me saying that, take them out 48, because look, this is exactly what I expected. A rigger re-ramp, because they're just, they're riggers, and that's why we put these opening range levels in here in the room every day. Most rooms, I would say 99% of them don't even know what the opening range is or have it marked or follow it or know how to mark it correctly like we do. But yeah, they are ramping it back up here, so that's okay. But we just have to consider that we got 1475 on that second trade level there, or some of you may have taken the whole thing off there. That's up to you. I leave it up to you. I just provide trade signals here in the room and kind of leave it up to you to trade the exact signals I give or work around them or do pretty much whatever you want here. I still say that right now we are forming a stronger bearish potential pattern that could take them down to 40. So definitely worth waiting. I think it's worth waiting for that. Okay, so let's see here. This CNBC is so fluffy and dumb. It's just the whole thing's like a gushy Warren Buffett type presentation today. Everything's Warren Buffett this, Warren Buffett that. They always drag him out when they always drag him out when they got nothing else to do, like the icon character, you know. Anyway, good for him. Let's see what else we got cooking on Bloomberg. So I'll be right back. I'm just checking the news here. We're still holding short, looking for a move down to 40 to 42 zone.
Well, good morning, Tom. We've gone short bonds, not just treasuries, but short gilts and short bunds. Left the JGB market alone, but it appears that it's a treasury phenomena and treasury directed based upon your Bloomberg report this morning with China being disaffected with U.S. treasuries, and your report a day or two ago about JGBs and their change in quantitative easing policies. But nonetheless, it appears a negative type of posture for bonds. I've also gone rather negative on high yield bonds and credit spreads because, as yields rise, zombie-like corporations pay higher yields and their spreads are compressed and their cover is compressed. And so this is not a favorable element for high yield bonds or sovereign bonds. And it's not a favorable element this morning, at least for the dollar.
You worked for years and you built for years a small shop that had enough mass where the Chinese worried about the Pacific Investment Management Company. Give us your experience of what China's doing at the margin.
We got a short trade on crude live. If we get a pop up to this red box, see that price marker? If we see this price marker right here jump up and merge into this red price marker, then we're going to go short there on the trade. Now that would be the first entry since the Cobra crossed under the orange line here. So that would be the first entry. But if they run for any reason down, 37 runs down under 35, 34, then it's getting too much to being a has-run trade, and the risk goes up taking the short. But if they can bounce them back to 40 or higher, we'll still take the trade. But like I said, if they drop down under 34, then it's an already has-run trade, and the risk of going short at 40 increases too much. Okay, the riggers are trying to contract the market right now. At least try to prevent another dip down to the bottom of the opening range, which you can see how they reacted to that. Which was a spring ball effect here. So now they're just trying to slow everything down. They're trying to look at the 13 contracts. They're just trying to quiet down that volume and stop. Okay, this is an already run trade. We didn't get a signal on the pullback at 39.40. So you can see them running down to 32. It's just better to stand aside in this trade. Even though if it does get a signal like at 38 or whatever, it's still probably okay for a trade, but I just see how everything's kind of run too much already, so
order pending.
Not recommend. Oh, here comes the goosers here again. Yeah, they're not going to go easy into the night, as they say. They're going to try to re-goose the market here a little. But we've taken most of our position off with average about 12 points gain. If you want to take a higher risk trade, then you can go ahead and short them right in this area here. If you did flatten out, you want to get back in, this is a good shorting area here. I'll make a note of that. Reshort 55.50 was where that was. Just as a note, if you did want to get back into it, and again, we'd be looking for a move, on a scalp basis back down to 47.50, but ultimately back to that 40 to 42 level. Still looking for that action. Rager's are just goosing them here. Let's see if they can back off. they get pretty. They've been pretty serious lately. They're angry. They got a bad case of sour grapes. They're not happy about all this selling, and they feel the pressure building up. Pretty soon, their little game's going to end for at least a while, at least for a 3% or something pullback. So they're not anxious for that to happen. It appears. Got their interest rate agenda, try to raise those interest rates up. All right, hopefully this can stop here, near here. They start to back it off again. But right now they stalled the volume down. That's the first step. Then they start trying to goose it up again. Then they get as much goose mileage as they can on the upside. And it just depends on the amount of sellers potentially overwhelming the market. Right now, with the price momentum has slowed a little as it's run up, and the volume is increased on the buy side. So I'm just watching my Volmo and Primo indicators here to see if that can return back to being a little bit more, a little weaker. But we re-entered a short if you got out and flattened out at 550, and we're still, basically back to looking for a move down to 40 to 42. Nothing's changed with that. It's a swing trade, and if they can't hold in general under like 7, then we probably want to cancel the re-entry on the short side, but we'd still be in the swing trade, and I suppose I would work like we did yesterday, some kind of mental stop. I'm guessing right now, just guess at 60 even, but I'm watching to see if they can hold in general under 57, start backing up again. On the sell side, we're now, the European market is leaving the U.S. market. It's early in the morning there. Most of them are getting ready to take a snooze. And so we're watching for the market to get a little bit different here and possibly more rigor controlled. There you go. Yep. Same old crap here with these stupid spikes. It's so embarrassing. Minute Europe starts leaving, that's when they got more control over the markets. They start rigging it up again. It's terrible. Look at this. Disgusting. You guys see this? I mean, it's just thoroughly disgusting how they can be allowed to do this. And at such, exact timing that I mentioned, with the European market leaving, and then they come in and just start playing games. Really ugly, I think. People should be locked up. Anyway, we're still short, and there again, this kind of phony one spike goosing job, it makes it so difficult to, plan your stops and all these things. But this is just an attempt to try to turn some programs on the buy side to try to do their work for them so they don't have to spend as much money to goose it. And they're being successful. It's a fact. Very successful here. Terrible. Sad, I think. So dishonest. And that we allow these non-American group known as the Federal Reserve, not even an American group, to manipulate and control our markets with a tight fist. and benefit tremendously from it. Goes to show you though why we got out at that 48 area right above the opening range. I just did not want to stick with that deal because this is the kind of junk that can happen in a market like today, especially. It is really treacherously whipsaw rigged market here. We're still short so far, but I suppose we'll have to go break even on the stop. We're really close to that now. Um, yeah, I'd still hold short, but we gotta see if we can get him to back off. Oh, we're right there. They were so nervous about that bottom of the opening range getting taken out and taken to task because they knew that everybody would think, oh, the market is no longer bullish here today so early in the day, losing that opening range mid-session like this. That's still a problem. I mean, if they go down and lose the opening range under 47 mid-session like this, not, later in the day, whatever, or early and then snapping them back, they always got time. But if they do that mid-session, it's like sends out a message they don't want the floor to see, because a lot of institutions go, whoa, breaking the under the opening range here, not good. Start dumping stock and stuff. Anyway, we're still short on that last third remaining position. So if you base it on like a 3 contract deal, you took one off at 10 points, one off at 14.75, and we still holding one as they roll back lower. And there's just kind of a general, what appears to be a fading of the riggers phony ramp up here. Let's see if that sticks. The key is to break them back down under 56. If we can do that, then we may be in good shape for another pullback attempt down to 47. But so far we're actually about break even on the day. And if we can break this thing down and get that move down to 40, we'll end up ahead. And I'll do all the math later, but that'll be great. I I do still expect that. Nothing's changed. Let's see if we can get them to break down again back under 56. We can see the selling fluidity is increasing, but as we talked about, there's still a lot of rigging on the bullish side, just not letting them go. All right, well, so we got a little relief pullback, so that's good. And just going to listen to this. Trying to listen to this Bill Gross interview. So I'll be watching. I'm just going to go on mute so I can turn my sound up on this and listen. And I'll just I'll keep you posted very instantly if there's any change that we should monitor. Watching right now to see that now that they've faded that ramp up, if they keep fading it under 56, which will probably be kind of a pivot number for a while, and then we're going to watch and see if we can keep them going lower.
0%.
Well, good morning, Tom. We've gone short bonds, not just treasuries, but short gilts and short bunds. Left the JGB market alone, but it appears that it's a treasury phenomena and treasury directed based upon your Bloomberg report this morning with China being disaffected with U.S. Treasuries, and your report a day or two ago about JGBs and their change in quantitative easing policies. But nonetheless, it appears a negative type of posture for bonds. I've also gone rather negative on high yield bonds and credit spreads because, as yields rise, zombie-like corporations pay higher yields and their spreads are compressed and their cover is compressed. And so this is not a favorable element for high yield bonds or sovereign bonds. And it's not a favorable element this morning, at least for the dollar.
You worked for years and you built for years a small shop that had enough mass where the Chinese worried about the Pacific Investment Management Company. Give us your experience of what China's doing at the margin with their treasury obligations.
Well, they certainly haven't been building treasuries, and recent evidence over the last few months suggests that they've been liquidating treasuries, supposedly in an effort to more diversify their portfolio. Perhaps, in any case, the liquidation of treasuries as opposed to the accumulation of treasuries by China over the past few years is certainly a negative. And, one of the things mentioned several days ago by your reporters has to do with quantitative easing, to the extent that the Japanese are less easy in terms of their purchases of JGBs, to the extent that the ECB at some point later this year pulls back. We've got a worldwide situation in which central banks in total, add in the Fed that's actually reducing their portfolio, in which the world central banks in total are not adding to their portfolio like they have in the past. There's been $14 trillion worth of bonds bought by central banks in the past 4 to 5 years. That appears to be close to an end.
Bill Gross, given your negative view on high yield and sovereign debt and so on, so where should investors go for yield right now?
Well, that's a good question because, a dramatic rise in yields, and I'm not suggesting that. I've suggested that once we broke the 240, 45 barrier on the 10-year, and it appears that we have, which is a long-term trend line over 25 years, that, the increase is likely to be mild. I think 10-year treasuries, could approach 2.7, 2.8% by the end of 2018. And what does that mean? That means another 2 or 3 points loss, and it basically wipes out all income for the year. It's not a bear market per se, but it's certainly not a bull market. To be technical, bear markets bottomed in 2012 and June of 2016 at 145, and so we're 100 basis points plus higher. That could be defined as a bear market, but I think more legitimately because bonds, for those years did still 3 or 4% based upon, high yield total returns. That the bear market that I'm talking about is a mild one, but it includes, negative prices for high yield bonds.
So your service team is highly
Order
trained.
pending.
Like ninjas. There's 3 of them here now. I'm kidding.
The market said.
All right, hitting them a little harder here, which is good. That's what we expected. We're trying to hold them short here for a move back to 47. And let's see if that can continue, or if you know who's going to try to disrupt again. Let's see what happens here. See if they can break them down again. Warren Buffett's latest headline here saying, I would buy a 5-year put on every cryptocurrency. He doesn't like the cryptos that much, I guess. Sure, people made a lot of money in those that got in at early stages and all that, but I don't know. Oh, look at the riggers just popping them back up on that little crunch down there on the downside. They're trying to re-pop it back up, making it a little more difficult. Yeah, officially we're just in a big whipsaw soup here right now. Look at that. They crunched them, and then the riggers just came, even with a red candle, they snapped them all the way back. They snapped them back here so that they wouldn't, it was so fast it didn't even change the algorithm in the boomerang color candle here. So a lot of games being played here by the riggers today. I still think it's probably close to some kind of topping area or something, but we'll have to see what happens here. Let's get them going here. So we're still holding. I mean, there's really no. The trade is a holding trade, a holding short trade for a move ultimately down to the 40 to 42 zone. That's the trade I see in here, and that's what we're trying to accomplish by just sticking with that. If we do get a dip down to 47.5 again, I might take the whole thing off. But I think if they go down there again, it's gonna blow to the downside. So we're gonna try at least for that. See what we get going here. So let's just go ahead and we've got This net position here is averaged about 12 points, right around 12 points. We'll just close it out there. A little bit more, I think, with the balance of 675, so maybe about 14 points on this trade average. So that's good. Good job. Thanks for watching.